Good day everyone, I'm Công from the Research Department of Mirae Asset Securities Vietnam. Recently, investors have showed strong interest in industrial park equities, which are poised to benefit from the favorable macroeconomic conditions, particularly the reallocation of global investment flows under the Trump 2.0 administration. In today's episode, we'll explore the investment potential of BCM, formerly known as Investment and Industrial Development Corporation, a leading stock in the sector with a vast portfolio of high-value assets. Using a top-down approach, let's first review the favorable macroeconomic conditions that underpin our decision to prioritize BCM. Vietnam is well-positioned globally, ranking among the world's top 20 FDI destinations. Within ASEAN, Vietnam stands third thanks to its competitive advantages. Over recent years, China has consistently ranked amongst Vietnam's top 3 investors, contributing to around 30% of total capital inflows. This trend is expected to persist due to shifts in global investment strategies. The China Plus One strategy and ongoing US-China trade tensions are key drivers of FDI inflows into Vietnam. Under a Trump 2.0 administration, tariffs on Chinese goods could climb as high as 60%, accelerating the relocation of high-quality FDI from China to Vietnam. In our base case scenario, we forecast utilized FDI to grow by a robust 8% annually from 2025 to 2027. Notably, 35 to 40% of this inflow is projected to be concentrated within industrial parks. To capitalize on this trend, key provinces have issued new master plans since 2023. While the government has expedited approvals for new industrial parks, as a result, 26 new IPs received investment licenses year to date, double the total for last year. This potential supply is largely concentrated in the Southern Economic Zone, which contributes over 1/3 of the nation's GDP. Binh Duong, Vietnam's largest industrial hub, is set to see a significant increase in supply. Next, let's focus on the infrastructure and strategic importance of the Binh Duong market. Looking ahead, infrastructure spending is set to be a major growth driver for Vietnam's economy. Between fiscal year 2023 to 25, the expected length of the expressways will exceed 70% of the total completed during the entire period between 2004 and 2022. These initiatives are poised to significantly enhance the long-term appeal of industrial parks. Key southern projects, including the Long Tan International Airport, will further boost the region's investment attractiveness. Binh Duong stands out in southern Vietnam as a key economic hub, bolstered by its exceptional infrastructure. Its infrastructure, further enhanced by synchronized transportational projects, positions Binh Duong as a nucleus for logistics and industrial activities in the region. As a result, Binh Duong has witnessed the highest population growth and housing demand in Vietnam. Now, let's talk about BCM and its leading market position. Established in 1976, BCM is often referred to as the iron fist of the state economy, with the province's People's Committee holding over 95% of its shares. The state backing provides BCM huge advantages in terms of regulatory support and preferential policies, facilitating its growth and expansion. Currently, it ranks as the top 1 IP developer in the nation, urban developer in Binh Duong, with both segments contributing over 70% of the total revenue. The company's operational efficiency has attracted international tenants such as Lego, Stella Mapletree, Panasonic, and Pandora. Beyond Binh Duong, BCM has expanded its footprint to other key economic zones, managing 11 subsidiaries and 17 affiliates. As of Q3, the book value of its investment portfolio reached nearly 18,700 billion Vietnam dong, representing 34% of total assets. Joint ventures and associates play an important role in the group's business operations, contributing to around 53% of net profit over the past 5 years. A notable contributor is the Vietnam-Singapore Industrial Park Joint Venture Company, a hallmark of Vietnamese-Singapore economic collaboration and often likened to as Golden Goose. In the first 9 months of 2024, despite standalone profit becoming somewhat disappointing, the affiliates play an important role in boosting earnings. Notably, among affiliates, BW Industrial Development Company, Vietnam's largest warehouse and logistics developer with nearly 24% of BCM ownership, reported its first profit after a prolonged period of expansion-driven losses. This turnaround is anticipated to sustain further as demand increases, with sale contracts increasing by 50% year-over-year in 2024. Also, BCM has managed to maintain positive standalone profit growth during the 2021 to 23 real estate downturn thanks to wholesale transactions with reputable foreign developers like Capital Land and Gamuda Land. Let's now dive into the most exciting part, the key investment highlights of BCM. These catalysts include the re-rating from the state divestment, large industrial land banks to size FDI inflows, and lastly, its focus on affordable to mid-price residential homes. To begin, we'll talk about the first catalyst, the state's divestment and its potential to unlock new value. Currently, the government holds the majority of the shares with over 95% stake. The remainder are owned by institutional foreign investors and its board of management, which hold 3.2%. This implies that the shareholder structure has been consistently tight. In May 2024, Deputy Prime Minister signed Decision Number 426, aligning the government's plan to reduce its ownership stake in BCM to at least 65% by 2025. To achieve this plan, BCM will go through multiple phases of action. For the first phase, a public offering of 300 million shares via action is planned for the first half of 2025, aiming to raise at least 15,000 billion Vietnam dong. This will dilute the government's stake to 74%. The raised capital could allow BCM to strengthen its financial capability and fund new project developments. If successfully executed, this divestment could trigger a re-rating based on enhanced valuation thanks to a reliable benchmark, greater capital flexibility, and finally, improved transparency and operational efficiency spurred by the increase of new shareholders. Historically, market re-ratings have been observed in other state-owned enterprises post-divestment, adding further upside potential to BCM's valuation. BCM and its affiliates dominate the industrial park landscape in Vietnam, controlling a total land bank of 17,375 hectares, equivalent to 19.5% of the country's IP area. In Binh Duong province alone, the share exceeds 50%. Additionally, the limited remaining leasable areas in Binh Duong are mostly controlled by BCM's ecosystems. Currently, pipeline projects in BCM include the Gay Chung IP with a site of 700 hectares, which officially launched in September 2024. Additionally, the IP developer awaits approval of a detailed construction planning project of the Vietnam-Singapore Industrial Park 3, Phase 2 covering 803.5 hectares, whereas Phase 1 has been operational since 2021, attracting major tenants such as Lego and Pandora. For other projects, BCM is making progress on Lai Hung IP and Bao Bang 3 and 4 IPs, ensuring a steady pipeline of leasable industrial land. Speaking of VSIP, it manages 18 IPs with industrial parks over 10,000 hectares in prime locations. Since 2023, it received investment approvals for 6 new IPs in the north and central, spanning approximately 2,600 hectares, all of which are under construction. Subsequently, VSIP's total construction pipeline reached 4,000 hectares, and this expansion aims to meet the increasing demand for high-quality industrial space driven by both foreign and domestic enterprises. In summary, 4,500 hectares of industrial land will be added to leasable inventory, contributing to 7% of national industrial land areas. Most of this construction started around mid-2024, setting the stage for substantial growth in the future. We expect BCM's competitiveness in attracting FDI to improve greatly after 2025, supported by infrastructure projects like the Long Tan International Airport and other regional infrastructure initiatives as aforementioned. As a leading economic entity for the province, BCM has been chosen to play a pivotal role in addressing affordable housing demand as part of Binh Duong's master plan. BCM and its affiliates have dominated the Binh Duong real estate market, in charge of implementing 55 out of 378 urban projects with a total site of 5,627 hectares, covering 66% of total project scales. Also, in the social housing segment, they exceed half of all implementation projects within over 60% of the launch sites. In Binh Duong, 60% of the population is comprised of industrial workers, significant demand for affordable housing options. As the government intensifies efforts to resolve bottlenecks in the real estate market, affordable housing demand is projected to remain a key profit driver for BCM. Plus, a market recovery is expected from 2025 onwards, supported by significant government initiatives. Looking ahead to 2025, BCM is expected to benefit from a strong market recovery, particularly in its core market of Binh Duong. We forecast 34.7% year-over-year revenue growth to 8,493 billion Vietnam dong, in which the IP segment generates 3,604 billion Vietnam dong, driven by the handover of 87 hectare, including 25 hectare from Chung IP. Net profit is projected to rise 51.2% year-over-year to 2,608 billion Vietnam dong, with increased contributions from affiliates, especially via IP. Our key assumptions reflect the positive outlook for BCM's business lines, including higher land handovers in both commercial and industrial land areas, underpinned by favorable macroeconomic conditions and policy support. Based on our assessment of BCM's opportunities and risks, we are applying sum of the parts method as it reflects its diversified business model. The fair value is estimated at 73,800 Vietnam dong per share, implying an upside of 12.3% from its current market price. Notably, the economic value of both industrial park and urban residential segments, including the associate portfolio, make up 86% of the gross asset value, reaffirming the strategic importance to BCM's portfolio. The synthesized model takes into account the various aspects of Becamex's performance and outlook, providing a comprehensive valuation that considers both short-term and long-term outlook. Although the first full upside potential remains uncertain, off-the-record assets, particularly unlisted RAND reserves, could be revealed once the divestment plan is successfully implemented, which is yet to be factored into our model. While BCM presents compelling growth opportunities, several risks warrant careful considerations. First are the policy execution risks. Delays in state divestment plans, land allocation, and investment process could disrupt the timeline for strategic initiatives. Macroeconomic uncertainty is also a concern, as the industrial park segment is highly sensitive to FDI inflows, which may be impacted by global economic conditions, geopolitical tensions, and changes in administration. Liquidity risks also remain a problem, as limited free flow liquidity could lower genuine investors' interest. Proactive measures, including diversification and operational transparency, are critical for mitigating these risks. That wraps up today's video. We look forward to bringing you more valuable insights in our next video. Thank you for watching.